Good afternoon, guys. I don't know why, but it looks like there's a little bit of like a haze over the cam, but I can't understand why that is. But hello, everybody. Hello, Harmeet. Hope you're doing well. Welcome to the live stream. We're going to be going over some charts of interest today. Obviously, we've had some data drop as well. We had the CAD CPI data, which missed expectations, came in a lot higher than what was expected. So seen a decent sort of run up there. We're coming obviously into the US session as well. Now I'm on Kiwi CAD at the moment, probably not the most exciting pair that anybody's ever really traded recently, but I had the idea of getting short Kiwi CAD today, down into this sort of 0 spot 83 sort of 50, 83.30 sort of area, which is this kind of volume profile level. Still in the short. Haven't taken profit on this short yet. Still in it at the moment. I did take profits on some other moves though, so I did have a little look at potentially a Euro CAD short as well. So we'll go take a look at all of those in a minute and kind of how I'm building my Forex trading watch list for the week ahead. And then, yeah, we'll go from there. Hi, CG. Hope you're doing well. So, yeah, let me know what you guys are trading today. We're going to be having a look at some interesting charts as usual. We're going to take a look at some of the data that's coming up. I mean, data-wise this week, not a huge amount going on. Not a huge amount going on. You know, if we have a little look at sort of what we've got on the slate for this week, there isn't a lot. Okay, Azalano, welcome to the live stream. Hope you're doing well. But yeah, not really too much going on in terms of data this week. Obviously, the CAD CPI data missing expectations to the upside would be quite interesting for those that are trading the Canadian dollar. CAD strength is something we've been looking at recently, especially in line with the commitment of trader reports as well. If anybody follows the commitment of trader reports, that's not what I want to type in. Let's go to the futures market, and we'll have a little look at the commitment of trader reports on the futures. Let's just go here. We'll go down to commitment traders. And what we're looking at in particular is that Canadian dollar, okay? And this is something I brought up in a video last week, I think it was, talking about the potential for buying on the Canadian dollar. And, you know, CPI backing up that now is good for us because obviously we're looking to take advantage of any kind of strength in the CAD markets at the moment, and in particular I'm looking to be short on Euro CAD, Kiwi CAD, potentially Pound CAD as well. But Euro CAD I quite like a lot because of the European tensions within the market, especially because of the elections coming up. So we'll talk about that in a minute as well. Hi Tabo, hope you're doing well. Right, let's get into it then. So upcoming data for this week, you know, whenever we try and set ourselves up for the trading day, the first thing we should be doing is coming to our economic calendar. Does anybody follow fundamental analysis within the markets? Let me know in the chat. But you want to be looking to see the high impact news. That's not just from a point of view of what's going to impact your trades, but that is an important part of it. But it's about what's coming up, what's the data telling us, where can that help us pitch in the markets, okay? Now, like I said, we've been talking a lot about, let me just change my microphone here so it sounds a little bit better. I just realized I might be on a different mic. Let me know if that sounds a little bit better. Let me see. Okay, and the camera looks a little bit better now. I don't know what happened before, but I've just gone into some settings. It was really bugging me. So hopefully that sounds a little bit better. Sound a little bit more professional, not necessarily in a sound like I'm in a tube anymore. Yeah, sounds better. Awesome. Okay, great. Right. Much better. Brilliant. Hi, Rye guy. Hope you're doing well. Good stuff. Right. Okay. We're back on track. We're back in the swing of things. I'm just watching Euro at the minute as well because I am short Euro. So I'm looking to see if I need to kind of cover anything here off. Might just no, I'm going to leave it. I'll leave it on. Right. Okay. Let me get back in the swing of things then. So big data coming up this week, really on Friday. We do have obviously important data out of Australia. We've got CPI expected to rise a little bit. The Australian dollar's been quite strong recently. RBA, potentially another hike on the cards for the RBA if inflation remains higher. So as traders, how do we use that information? When somebody says to you, oh, inflation's going to be higher, how do we use that? Well, what we try and do is gauge whether a market is going to cut interest rates or hold interest rates or hike interest rates. And we can do that by looking at some economic sort of areas, some economic indicators. One of those is CPI. CPI obviously relates to the inflation within the market. We've also got the tools of sort of GDP. GDP less so, but GDP shows growth within an economy. And you've got the labour market. You've got labour market statistics, the unemployment rates, the employment rates, the wages, and things like that. So that's why these kind of data sets are those kind of big areas. Now, if the inflation rate is running a little bit hotter at the moment, it means that the central bank will likely leave rates unchanged or will lean more towards being a hiker. Okay. As a trader, that could be positive for the currency. Okay. So essentially, we might want to be buying the Australian dollars. Okay. Very much why I'm very bullish on the US dollar at the moment, although that could change this week depending on how this figure comes out, the core PCE price index, because the core PCE price index month on month is the inflationary gauge that the Federal Reserve look at. Okay. We see CPI getting the headlines because CPI is the first data release in terms of inflation. But core PCE price index is what the Federal Reserve use as their primary gauge of inflation. So that tells us that that is the most important. Okay. So Friday is going to be a big day, and we'll come on to that on Thursday because we've got another stream on Thursday. So right now we've got CPI data coming out, but this Australian one is interesting to me as well. It means that maybe I want to be a buyer of the Australian dollar, buyer of the Canadian dollar at the moment. I quite like, and that's why I'm trading it. From sentiment point of view, we can use the commitment of trader reports. Now, this side of trading's not fancy, is it? It's not exciting, right? You've got to, it's what people want to see is get me on the charts, get me doing the technical analysis, and that's great. That's really great. Technical analysis is a good, I would say, starting point. It's a good base to work off of. But then adding a little bit of context. I was talking about this morning on the Trade Delicious stream. If you want to go and see me over there as well, I do a bit of I do the morning brief with Jordan over there. And we were discussing the idea that, fundamentals give you the base, the hard foundations, and then you've got the technicals surrounding that can help you kind of time your positions within the markets. Okay, so that's why I really like it. But I also kind of discussed loving the craft, right? We're in the markets, we want to make money out of it, great. But if we fall in love with it and we love the data, it's only going to benefit us going forwards, right? Tell me if you think I'm wrong in the chat, but I think that's why I love this market. I love the game. I love looking at all these conditions that help you build a narrative in the market. And one of those is the commitment of trader reports for me. Commitment of trader reports helps me build a narrative within a market. And we're looking at the commitment of trader reports on the Canadian dollar futures market at the moment. And the commercials are buying at aggressive rates, right? They're buying the Canadian dollar aggressively. So if the commercials are buying aggressively, those are sort of businesses in the market doing sort of hedging, essentially. They're hedging their sort of positions within the market.
they're usually the ones that call the top within the market or the low within the market. So if they're buying heavily, what do I really want to be doing? I want to try and be following those, in my opinion. We could say we want to be following the non-coms because they're hedge funds. So you want to be following hedge funds, but there becomes an extreme. And this is where I think the commitment to trade reports can really highlight levels of turning points. And the Canadian dollar for me is one that I want to buy. So I look for longs on CAD at the minute. This is a CAD futures chart. You just inverse it for your dollar CAD prices. And I think that if we start breaching, which would be on dollar CAD 1.36, then we're going to see some significant CAD strength. So if I just bring on the CAD chart, for instance, I am short Kiwi CAD at the moment, but we'll come back to it. Dollar CAD is here. No, that's dollar peso. Sorry, dollar CAD is here. 136. We've talked about this for a while. Hasn't really played out the way I expected it to, but price finding support at 136. We've come into it again today and we've found a little bit of support from that area. 136 is being defended very, very well at the moment, but it could be vulnerable. We've got lows that are kind of forming around this area. Means that there could be shorts developing or kind of short positions that could be targeted here. So I'm expecting maybe something like this to happen on US dollar CAD. I like the idea of being a buyer of the Canadian dollar. We've just seen CPI miss to the upside. That could have an effect on the potential for a cut in the future from the Bank of Canada, because there is a 71% chance before going into this meeting today, this data today, 71% chance of a cut from the Bank of Canada in the next meeting. The market may want to try and get ahead of that by selling CAD. That data will potentially change their minds. Okay. Plus, we've got the COT data. So adding it all together, I like the idea of being a CAD buyer. Herc John got a tan, looking good, lad. Thank you very much. Yeah, I did a lot of gardening over the weekend, so I was out in the sunshine, did a lot of beer drinking as well. So, but we won't talk about that here. What's the show you called on? Trade Delicious? Yeah, it's called Trade Delicious TV. I did a morning brief over there with Jordan, so you can come and watch that as well. But essentially, you know, the market here on dollar CAD defending 136 at the moment. I think if we breach 136, we're going to see some downside here as well. So let's go over to Kiwi CAD. Why did I think Kiwi CAD was a good position? I actually thought Euro CAD was a better position to be in. It's just I was already short last week and I took my profits and I didn't manage to get in again because I'd already had risk open on the table. So unfortunately for me, didn't get the short on Euro CAD. I got the short on Kiwi CAD instead. Let me just bring down my sort of area here, which is unfortunate really, because I like the idea of being short Euro CAD. And let me just bring up my absolute favorite tool, which I harp on about all the time, strength and weakness table. And again, this is about loving the craft, right? Loving the craft, getting all the data in to try and help you make better decisions. Right, guys, sounds about right. Yeah, Herc, can you do a quick rundown on COT? What does it mean with commercials and non-commercials pointing up and down? How does this affect price? Yeah, I'll come back to that in a little bit, actually, Herc, if that's all right. I'm just going to run through a few charts first, and then we'll come back to the commitment to trader reports in a moment. Hi, Vincent. Hope you're doing well. I'm doing really well, thank you. Yeah, let's just go quickly over why I'm interested in Kiwi CAD then. So I do a lot of strength and weakness analysis. I like to try and identify currencies that are getting weaker and currencies that are getting stronger. I then pit the two together and make trades and opportunities surrounding it. Simple as that. So Kiwi was one of the worst performing currencies last week, according to the way I developed the strength meter. If I come down to the 50 MA area as well, the New Zealand dollar also losing some ground here on the 50 MA one as well. So basically, this kind of gives me an idea or a framework to work with, right? So I've got a New Zealand dollar that is weakening. What currencies are getting stronger at the moment? I can see that the Canadian dollar is getting stronger. I can see that the US dollar is getting stronger. I can see that the Australian dollar is getting stronger. So really, I could be Aussie Kiwi long. I could be looking at sort of Euro CAD shorts, Euro Oz shorts, Kiwi CAD short, essentially, was the one that we're talking about at the moment. And then what I do is I just gauge it depending on what the weekly time frame's doing, where it is in regards to the 50 moving average. Is it moving away from the 50 moving average or towards it? Where's the stochastic daily trend, and so on and so forth. So basically then what we'll do on the daily chart is I identify where the market is in terms of the daily closes. Okay, so today, dollar yen, no, not dollar yen, sorry, Aussie yen, CAD yen, were all looking bullish. Kiwi CAD was looking bearish. Okay, so what I do with that information is I come over to the chart, and if we go over to Kiwi CAD, and I have a little look at some information, okay, because that's what the charts are giving us now. They're giving us just more information, but technical information. Now, the idea is I want to be short on this market. I want to be looking for short opportunities, but I also have to understand the conditions surrounding that market, because if I'm trying to short in an upward trend, then, you know, sometimes the market's just going to follow that trend before we get the turning point. Now, what I noticed was the market was trending higher. We're making higher highs and higher lows until this point here. ₀.85, we make a new high, but we fail to make a new higher high. Okay, we pull back, we get a nice little bullish pin candlestick, but price fails to trade any higher. We then trade through those lows. So a lot of people would call that a change of conditions, a break in structure, whatever you want to call it. We've broken into new lows. But I like to trade from volume to volume, right? So what I did was I got a volume profile on. And I mean, if you want to take it from the very swing low to the very swing high, you can do like that. And what I do then is try and point out high volume levels within that area to go and target. Okay, because I think high volume levels are magnets for price. Okay, so we're on the way down. We've breached this one. So the market hasn't respected this one, which is fine. We look for the next one. We've got that one up here at ₀.83 sort of 30s. And then we've got this one down here towards 82.45s. So in my head, my game plan already is, well, if we come into here, I want to be looking for support. Okay, so if I'm short into that level, I want to be taking profits. If I breach this level, then I know, or I don't know, but there's a good potential that we're going to move down to this level of volume. Okay, so that's what I'm looking for right now. At the moment, I'm short this market, and I'm short in and around this area here. Okay, so price came up, rejected the 50 MA, rallied into area. And where does it rally into? Rallies into volume. Okay, now this volume profile is built up from the daily, so the 30-minute time frame, but it's yesterday's price action. And all I'm looking for again is, where's the heavy volume? Does price resist it, or does it go through it? Okay, and what we had was price held it. Okay, so you can see in here, if I just zoom in a little bit, price held it. So you can see how I've built a picture up over a period of time. You know, I've looked at the commitment of trader reports. I've looked at strength and weakness analysis, and then I've developed a technical analysis around it to understand why I should be getting short this market in particular. Okay, does that make sense? Hopefully that makes sense. And this is what I'm trying to do every time I come on stream with you guys, is just try and point you in a way that has helped me. It might not help you because everybody's different, but if you can take a little bit from it, it's getting the data before you get to the chart will change the way you trade. Okay, it's very easy to come to a chart and just trade it. It's very easy to trade in terms of pushing the button. What's difficult is understanding why you're pushing the button. Okay, it could be a technical strategy, that's fine. But then you've got to, you know, I think if you're just trading with a technical strategy, you might as well get it automated. because, no offense, the robot will do it better than you because it's following set rules. As soon as you put a human in there, you're adding discretion. Okay, that's why I think discretionary trading is better than mechanical trading strategies, because as soon as you put human emotion into it, there's discretion behind what you're doing. So that's why I trade the way I trade. I like to be the one that, you know, pushes it. Volume nodes can be good areas for support and resistance, TP areas of interest to manage your setup, risk management. Yeah, absolutely. Yeah, you know, like even if you were, you know, let's say you did get short on this volume, you know that you want to put your stop loss above another area of volume, you know, because the volume areas can be areas of support and resistance. Yeah, absolutely. So yeah, it would have been like to have been short EuroCAD, but I didn't get that entry. Obviously, I shorted it last week, which would have been doing pretty well actually. Let me just have a look. Would have been 130 pips up, and I had a original 38 pip target. So that's the way it goes sometimes. Market just continued on. Nice move there. But yeah, let me know what you guys are trading at the minute. What charts do you want to see as well? Let me know in the chat box. Let me just bring back in the strength and weakness table. So essentially, if you want to take a screenshot of this, please feel free to do so. I have put it on the latest video, currency strength analysis video. So if you did want to see it there, you can also go and see it there. And obviously, I post about it on my Twitter as well. If you want to come and follow me on Twitter, John Talks FX. So yeah, Kiwi CAD was one of those charts to have a little look at going into this week. There are some other charts that I quite like the look of as well. Potentially pound Aussie, but it's not particularly setting up the way I want it to set up just yet. Obviously, got short pound Aussie last week as well on the 17th of June. That one did pretty well. But yeah, I'm waiting for a bit more of a setup here on pound Aussie, so we'll wait for that one. Vincent is pound dollar short. Asalana wants to take a look at Aussie US dollar, and Harmy wants to take a look at pound Swiss. Oh, we got 2 pound Swisses. Harmy and Rygar want to take a look at pound Swiss. Okay, so let's take a look at pound US dollar short first, and then we're going to go and have a little look at the other charts there, the Aussie US dollar. So obviously pound US dollar here, bearish on the currency heat map. I like the idea of being short pound US dollar at the moment. It's just where do we get short is the sort of question. Now I have highlighted a level here today, which was 127. And this again was highlighted in the week ahead analysis video. I like the idea of trading cable short, and there was this volume that was being built towards the 127 handle and above. Also like the fact that it's the psychological number of 127, so I quite like the idea of that as well. And we did get a short reaction from there. We did get a sort of nice little rejection, about 20 pip rejection from there, which is good. We're also breaking through structure points now, so the market is, you know, breaking these swing lows in here, breaking these swing lows. Haven't got a close below that low yet, but, you know, potential. And what I like about this as well is you've got, you can add kind of multiple layers to this as well in terms of your technicals. So you've got the 4-hour time frame on the left-hand side making lower lows, lower highs, right? We're below the 50 MA on the 4-hour time frame, showing us that market's more favoring the downside. Okay. We've got a stochastic, which is in the overbought condition. So you can just kind of add this as like a checklist. We've got price rejecting volume. Okay. And we have divergence. So the market is making higher highs, right? And the stochastic is making lower highs. All good conditions, right, for ideas to get short. So yeah, I like pound US dollar short. You know, we're coming back in here now. So what we could potentially do is look for a place where price pulls back to in order to potentially look for a short if you're not in this position already. So what we could do is if I go, let's go to a lower time frame. Let's go to the 15-minute, let's say. And what I'm going to look at is I'm just going to volume profile high to low currently. And we're just going to see where volume's being built. So we've got volume being built. I didn't mean to press that. I meant to press this one. Volume being built here. Volume being built here. Okay. So obviously sellers originally won from this little area here. So I wouldn't mind that if price came back into this area here, 126.90, if we saw it defended by sellers, then that could be a good area to look for a position into pound US dollar at the moment. Okay. But we've got good sort of ideas around this one. Obviously, pound's been a little bit weaker lately. There's been a lot of talk of election talk and stuff, election risks. We've got the general election in the UK next week. So we're going to see a lot of volatility surrounding that event. And cable, I feel, could be vulnerable to some downside. Okay. How I'm positioning myself in that right now, I don't know. I've got some ideas, but I'm going to save it for a webinar next week. So I'm doing a webinar. I basically like the idea of price coming into sort of this area down here towards 125, maybe even 124s. But yeah, I'll need to think about where I'll be positioning myself in that kind of in those conditions there. So yeah, pound US dollar, I like the look of a lot. Let's go take a look at some other charts then. So another chart was Aussie US dollar. Now, Aussie is an interesting market, right? Aussie is very interesting. And we can tell because of the way all the other major pairs are against the US dollar at the moment. Okay, so this is a daily chart on Aussie. If I just flick back through euro and pound, we can see that euro dollar is down. We can see that pound US dollar is down. Aussie US dollar is in a range. Kiwi dollar is in a range. Dollar CAD's in a range. Dollar Swiss is in a downward trend, showing us that little bit of Swissy strength there. Dollar yen is in an upward trend. So that tells me that against the US dollar, which is a stronger currency at the moment, that the Australian dollar is fairly strong as well, because we've got this range-bound market. That's how a range develops. But you've got two strong or two weak currencies against each other. So I like the idea here of doing nothing, to be honest, as Alano. I like the idea of not trading this. And the reason being is because of your risk management. Okay, so you want clear-cut opportunities. Now, if you're trading Aussie US dollar, you want to be doing it on a day trading time frame. Okay, so maybe looking at your previous day's price action, looking to trade around volume points to try and, you know, capture small movements in the market. But if I was looking at this from a swing trading point of view, I'd only want to be short from the high or long from the low. Okay, because of where you can place your risk. If I was trying to get short down to this low now, it's very difficult to tell whether it will get down to that point. I mean, you'll never truly know anyway. But what's the probability of it going down to here than it's going up there? Well, right now it's like 50-50, right? Because we're in the middle of the trading range. I would go and look at Aussie strength elsewhere. So one of those markets that I just mentioned earlier is Aussie yen. You know, you could potentially look for long ideas on Aussie yen. And I was looking around this area today, but I felt that the market had already tested it overnight. So I didn't take any action, but it looks like the market has found a little bit of support here again today, and we're starting to push higher. Now, the only difficult thing with Aussie yen at the moment is nobody knows what's going on with the yen. Bank of Japan don't even know what's going on with the yen. They move at a very, very slow pace. So they're not really bothered by changing anything right now. That's why we're seeing a lot of yen weakness in the market. But they have talked about intervention. So we had a little bit of a soft intervention yesterday in terms of the fact that they said that they would intervene. It wasn't an intervention, but they said they would, and price reacted like that. We had a sharp move to the downside, big move back higher. So, you know, I feel like the yen market at the moment is starting to become a little bit fragile. And although I was short dollar yen yesterday, I'm probably going to stay away from the yen pairs. So another chart, though, that you could look to trade if you're looking at Aussie strength is Euro Oz. Right? Market here in a downward trend. Look at that beautiful sort of breakout of consolidation again, breeding all that selling volume within these levels, and then the market drops lower. But now we're in a trend. So essentially all you want to do is trying to identify where those key resistance levels are, where those key support points are. Now, looking at the 4-hour time frame, if I'm looking at this from a swing trading position, the volume's a bit higher up, around 162. Right in there. This is where I'd be interested in being short Euro Oz. If price got back up into 162, I'd be happy to look for a potential short position in and around this level here. Okay, so I'm actually going to set an alert on Euro Oz because I don't actually mind that short there. Pound Oz as well. Market's trading to the downside. I got short in and around this area here. Market dropped to the downside. I'm looking for conditions to try and get back into this move, although we are in this area here at the minute. And again, this is why I always talk about consolidations and volume, because if I just grab a volume profile here, and it's not obviously as accurate as if you was going to use a futures market, but it's as good as, look at where the volume is being built in that area. Point of control of that area, which is the most volume traded level, is here. And look how price has reacted from it. That's a trading strategy right there. That's a trading strategy. Highlighting levels like that and then getting involved with them at those key points. All right. So pound Aussie I quite like. I was looking potentially at this area here to get short. We broke out of it. The market came back into it. But I didn't like the setup. Mainly because the daily chart is pulling back. Okay. Daily chart is in that secondary phase. So I didn't like the idea of being short on that secondary phase. I want to wait to see that turn from being bullish into bearish again. And that's why I use the heat map and the daily closes. That's why I got a short Kiwi CAD. Okay. Just watching euro dollar. I am in a short position euro, and it looks like it's starting to find a little bit of support. We're coming into the US session, and you know what the US session is like. Sometimes we can reverse the sort of price action that we've been seeing in the European session, and the market has been down all day. So I'm going to look to take a little bit off the table here. Might take the whole trade off, to be honest. Yeah, I'll take the whole trade off. So I locked in some profit there on euro US dollar. And let me just show you that on my trade tracker. So that's what I've just profited on, right? I got short at volume, just took profits, 27 pips. I like the idea of my full target was here. So 34 pips. I'm happy to give a few pips away just to lock in the profits there. But I do like the idea of price coming down here because I think that could be fairly bullish for price. So let's have a little look at euro US dollar. But yeah, hopefully that explained a lot, Ozolano. You can look at Aussie US dollar, but understand the condition of the market. It's in a range. Does that mean that you shouldn't trade it? No. Just understand that market is there. But if you're a trend trader, maybe you want to go and look at the Aussie strength against weaker currencies. Harmeet wants to take a look at pound Swiss as well as Rygai. Looking at pound Swiss to the upside, Rygai is. Let's have a little look. Harmeet, are you looking at pound Swiss upside as well? Now, I know why you're looking for upside. We've come into this big supporting area, right? around that 120. Fundamentals surrounding the Swiss franc at the moment are really interesting. We had the Swiss National Bank cut interest rates again, surprisingly, by 25 basis points. And I've kind of said that they're happy to sort of intervene, right? But they've also said they're happy to intervene on both levels. Honestly, need to do a little bit more research around the Swiss National Bank because I've actually been focused a lot on oil this week. So I could do the little top-up research on Swiss National Bank, to be honest. Let's see if there's any kind of headlines. I mean, they've cut rates twice now, haven't they? So they've cut 50 basis points now. Let's have a quick look. Second time, because the Swiss franc has been very strong, and I don't know whether they're trying to cut it to try and weaken the Swiss franc, because that's what they said initially. They wanted to weaken the Swiss franc, but it had the opposite effect. The Swiss franc got stronger. And I think that was partly due to the fact of those European election worries. Yeah, so I'm just reading this Reuters one, and it's just basically agreed with my bias. The recent rise of the Swiss franc, driven by rising political uncertainty in Europe, pushing investors towards the safe haven currency, was also highlighted by Jordan. So this is the pressure that the Swiss. So they've said they're going to intervene, right? Now, to me, that means they're going to intervene if the Swiss franc continues to get stronger. So that's kind of giving you the idea that you want to be short Swiss franc because he's saying that they're going to intervene. The only problem I have is the European elections coming up Sunday. So we're not out of the woods yet. If we do see the far right rise up within France and they win, essentially, that could be pretty bad for the euro. Pretty bad for uncertainty as well. The markets don't like uncertainty. When they see uncertainty, what do they rush to? Safe havens. Just seen it there on the Reuters thing that Jordan is saying that the safe haven pressure has come from the European election worries. So if we were to see that, then pound Swiss could continue to trade lower just from the Swiss franc point of view. So I'm not saying avoid it. But I am going to say, if I was long, I'd be long very short term. And that means that maybe I would be looking at, we've got this kind of downward move in here. We've got sort of volume in and around this zone, 114s. I'll probably looking to be out by sort of 113.90s, and I wouldn't be looking to get back in unless we saw a significant drop in the Swiss franc, because then I would be thinking, is the Swiss National Bank going to intervene on this strength? So, yeah, because I see Euro Swiss downside as well, basically from the political play. And I don't see that changing right now. Be interesting to see how it forms after Sunday. I wouldn't be holding a Swiss franc trade over the weekend, put it that way. I would not be doing that. We might see some gaps over the weekend. So this might be the weekend where you want to, I don't know, does anybody in the chat hold their trades over a weekend? Let me know. If you do, this might be the weekend not to do that. Unless you have some firm beliefs, of course. But yeah, pound Swiss, we're against trend here. So, if you're looking for longs, I'll be looking at short-term longs. You could probably have played into some short-term volume moves going over the past kind of couple of days. We've only really had one trading day so far. And price seemed to have come into this volume area here and rallied from that. So, that would have been probably my only opportunity, unless you're looking at the breaks above the 50 MA. On a 30-minute time frame, where you'd be looking at probably getting in long around now, potentially up to that 113.90 handle. But I think that's a risky trade. I think that's a risky trade, personally. I traded Aussie US dollar today. Took a short off prior day's highs. Confluence on the dollar gaining strength, both at the technical level and fundamentals. Hoping to short Euro and DAX, but went too quick. Yeah, nice. Like those plays. Like the idea of shorting from a high. That's kind of my favorite there. And you've locked in 3 to 1. Perfect. You're welcome, Azalano. Tabo. I missed the Euro dollar short opportunities. There'll be more. There'll be more. Don't worry. Don't get FOMO though. Stick to your plan. Stick to your trading plan. You know, I've just closed out, and it might still continue lower. So, you know, what would you rather be in? Right, guy. I hardly ever hold trades over the weekend unless I have at least 7 or so reasons to. 7 reasons. I like that. I like 7 reasons. And again, I like that because it shows you that you're doing the work behind the scene to go, right, okay, I've got all these conditions met. I should be able to hold this. I mean, thanks for the analysis. No worries. Yeah, I'm not against that move. I like to understand the condition, and at least, you know, if we understand the condition, you could absolutely go long from here. You know, there was very good support here in the past, and I'd rather be buying from down here than selling. That's for sure. I just don't think I'd want to be a seller beyond there right now. I'd want to see, unless we had like move into here, rejection, and then a rally, you know, then I'd be looking for longs. So I'm nearly flat now, actually. I've only got a Kiwi CAD short on at the minute, which I'm looking at sort of first targets at 83.30s. We're about 12 pips away from that at the moment, plus minus spread. So, yeah, we'll see if that can continue down. Gold's an interesting one, though, right? Has anybody been looking at gold recently? I want to take a look at gold, and I want to take a look at natural gas and oil. Let's do natural gas and oil first, because I've missed a long opportunity, by the way. I could probably still get into a move here, but I was looking for basically price to come down into this volume area today and reject. I mean, it looks like we're getting it right now. But oil at the moment on the march, we came down very close to that level of support we were talking about. Market is just, boom, big move away from there. Didn't really get any kind of opportunities to get long oil at the moment, and now we've broken above $80. So for me, $80 has been kind of a good measure of where we should be long and short in the market. We've been basically saying anything below $80 is probably bearish, anything above $80 is bullish, and that's worked out pretty well throughout this year so far. So now we're back above $80. I'm happy to be a buyer of oil again. So just been watching sort of price action, got the volume set up here, and didn't trade that, unfortunately. Would have liked to have maybe scalped a little long there, but yeah, wasn't around to do that at the time. But yeah, why do I want to be looking at oil? Well, I saw this report in here that really got my attention. Okay, so natural gas to be the Brent forecast, right? Basically, I was looking at the conditions around oil, right? And the fact that we had inventories coming lower, okay? So you've got sort of your inventories. Let me see if I can get it up. So the latest release was on the 20th. Okay, so let me just bring this in just to add to our confluence. So the latest release was on June 20th, 2024, right? Previous was 3.73, right? Forecast was minus 2.8, and we had an actual of minus 2.54. Now, that number probably would have come out green on your economic calendars because it beat the forecast, but that's down heavily from 3.7, right? And you can see here, if the increase in crude oil inventories is more than expected, why is it doing that? Let me just highlight it. It implies weaker demand and bearish for crude prices. The same can be said if a decline in inventories is less than expected. You know, if the increase in crude is less than expected, it implies greater demand and bullish for crude prices, right? So we're looking for the decline in inventories as a suggestion that there is more demand, right, or lack of supply, right? So that's helping fuel this little move in here, right? Now, on the other article, let's go back to that. And this is what I do all the time. You know, I'm just looking at different things, trying to build a narrative for why things are happening and do those narratives continue. And we're seeing a lot of demand at the moment. Okay, so it says the highest gasoline consumption since the pandemic ended further support prices, though a dip below $81 could trigger for liquidations here. But we're also looking at the predictions of fuel demand surge, okay, in global inventories as key factors into seeing higher prices of oil. Okay, great. If we look at natural gas, why we're seeing natural gas, we've got high pressure dominating the southern US with highs of 90s and 100s, while the northern US have highs of 70s and 80s. So there's basically a big heat wave going on in the US right now, and that's resulting in very high national demand for natural gas. Huge demand for natural gas right now, used in air conditioning, things like that. So we've also got EU sanctions in Russia on natural gas. So oil and natural gas could naturally see continuations to the upside here because there is demand for the commodity. You know, another thing we can look at basically as well, Warren Buffett invested into Oxy. I don't even know if anybody knows of Oxy, but Oxy is a stock, so Occidental Petroleum Corporation. And if you look at the price of Oxy and then compare it to the price of the oil market of WTI oil, they're very similar, very, very similar. So if I just maximize this screen here, what I'm going to do is take all these lines off. I'm going to hide those drawing tools and I'm going to turn it into a line chart. And I'm going to grow plus there, and we're going to go WTI, okay? And now these two charts, so we've got Oxy as the white line, WTI as the orange line. Look at the correlation between them, right? Prices were down here. Warren Buffett bought quite a significant amount of shares in Oxy, right? And look at the price now, in line with WTI. WTI is continuing to move higher. Oxy is continuing to move higher. Okay, so that's another play there if you do trade stocks, having a little look at Oxy. But this is telling me that potentially oil prices are going to continue to rise. If Warren Buffett is buying into a stock that follows the price of oil quite closely, you're going to take a little bit of notice, right? Arguably one of the best investors ever. You know, how could you deny that, right? So could be a good opportunity for us there in terms of oil prices moving higher. So if you are an oil trader or you do trade oil prices, then maybe there's something here. Now, for me, on a day trading side of things, like I said, I like that little volume area that was being built within here today. Haven't taken a trade on that. I do have an alert a little bit lower though, because I like the area here as well. There you go. There's the lines just come back on. Down towards this kind of $78 handle level. Okay. Reason I like that is because if we go put a volume profile on, you've got all that volume being built there on the daily chart. So around about $78 I quite like, a little bit higher up maybe. So I do like the idea of price potentially coming into here and rebounding, but are we going to get that right now? Probably not. Probably not. Market's finding buyers down in this little volume pocket here, and looks like we're going to see a little bit more upside there. So really speaking, I could have got in, a decent long position around this level, perhaps that close back above the volume. Could have been looking to target up towards sort of 82.50s. Stop loss could be go below that sort of previous area of volume, something like that. Could have been looking at. But this is a 15-minute chart. If I go to a 30-minute time frame, we are starting to break back above the 50 MA stochastic, going from oversold. So that could also be a condition to look for potential long ideas. The only problem with the moving average move at the moment is the fact that price is in a little bit of a trading range there. Okay, so take that as you will. But yeah, I like oil. Let's go take a look at gold though. So yeah, gold rebounded quite aggressively. So last week we were talking about this pattern here. Okay, so we were looking at this area there, and we basically said, is that a bullish trading pattern? Right, so we were looking at this in here, I believe. I think it was like that. Okay, so did anybody try that? I did. I traded the breakout of this on gold, and I did okay. I'm just going to say I did okay because I took half my position off at the highs here, moved my stop loss to break even, and then got took out on break even on the second part of the condition, which is unfortunate. But we played this one pretty nicely. What we were discussing in the live stream last week, I'll get rid of all this sort of old data, was there's an idea that I feel like we could see gold prices move lower, and it's more from a monthly time frame point of view, because I'm looking at this higher time frame and I'm saying to myself, where's the value? Where would I want to be long? I want to be long down here. But obviously as traders, we can day trade the movements. No worries, right, guy? Thanks for joining. Thank you. I'll catch you in the next one. Guys, if you're enjoying the information, by the way, if you could leave the stream a like, I'd really appreciate that. Last time we got up to 22 likes, and that's the most likes we had on a stream. So if you could leave me a like, I'd really appreciate that. Kind of lets me know that you're enjoying the information and that you find it helpful. But yeah, so we got this monthly chart here. It's more from a technical basis. Looks like it's a bit overbought from a technical point of view. But what we were looking at the time was this kind of triangular pattern. And we were seeing triangle patterns everywhere. I think we had one on dollar yen as well that we bought as well. But we have these kind of higher lows being formed when the market was forming a base of resistance. Very strong idea then that the market will break to the upside. And the reason because of that is because when you're seeing the sell-offs, they're not as strong. It's telling me that sellers aren't really getting aggressive, okay? And buyers aren't particularly done with price. So once we broke that, I like the idea of being bullish, got long on this market, ended up taking some profits off. What did I take profits off? 23.66 is where I took profits off, which is here. I was looking for full targets at 23.70, so I probably should have just banked this, but I didn't. And then the market came back, took me out for break even there. And basically I bought on the breakout a little bit higher up. So this kind of breakout here, 23.44, took some out at 23.66, was looking at 23.70 targets. Let me just show you that on the chart in here. So you can see it side by side. This was that was the trading view analysis that we did. This is my trading charts. You can see that same pattern was what we were looking at. Ended up taking a long position on the trade tracker there. Took profits at 23.66. Moved stop loss just above break even, just above that low there, and got taken out. Would have got taken out at break even anyway. But the conditions surrounding gold at the moment quite interesting. Like I said, I still feel like there's potential for the market to move lower. Do you know what will be interesting? And this will circle me back to commitment of trader reports. Is let's have a little look at where gold futures are trading at the moment. And I can then explain kind of what you're looking for and what it means, the commitment of trader reports. And the way best to use them, I feel, anyway. Let's drag that one to the top. We don't need this one. Basically, this is the disaggregated. You don't need that. You want the legacy, commitment of traders legacy there. So basically, in a nutshell, you've got 3 lines here, right? The red line is the commercials. So they're in the markets for business purposes. I have done a video on this recently. If you do want to trade with COT reports and you want a bit more detail, let me just actually get this up and I'll put it in the chat box for you. Let me go. Blueberry markets on socials on YouTube, and then I can just grab it because I actually did it quite recently. So there was this one, which is huge reversal on Canadian dollar, right? So I'm going to put it in the chat box now. So that is a video I did basically talking about the commitment of trader reports and the potential to be a seller, no, a buyer, sorry, of CAD. But essentially what you've got is the commercials, which is the red line. So commercials are in the markets for businesses purposes. They're not in it to profit. Okay, that's a big thing to take note of. They're not in it to make money. They're in it to hedge their positions. So if an international currency is an international business, it has to, sell internationally. They might want to lock in an interest rate, right? So they'll lock in a certain amount of contracts. Okay, they can also then trade the futures essentially, or the options, in order to hedge their risk. Okay, and that's what the commercials are kind of made up of. You've then got the green line, which is what is classed as non-commercials. Now they are your typical sort of hedge funds, trend followers. Essentially, they will look to profit from the markets. Okay, so the rule of thumb is that you follow the green line, right? And that technically makes sense because you can see here when we do get the turning point, right? So on a day-to-day basis of the COT reports, you want to be following the green line, the non-coms. They need to make money. You can see that as price rises, so do the long contracts on the non-com side of things, right? Now, what we're looking for, or what I'm looking for, is extremes. And this is where I use the COT reports probably a little bit differently than probably how most use it. But this is the way that I was taught, and this is the way that I like to use it. So I like to look at where the extremes are within the market. And what I mean by extremes is I'm looking for big turning points on the commitment of trader reports. Okay, so let me just change this to a different color. Let's make it short dash. Do not delete it. Click apply. Right. Okay. So for example, on gold right now, this is where I feel a top will come in the market. Okay. When the short contracts from the commercial side of things become extreme, okay, because then you get this kind of difference in supply and demand, and then that creates this kind of dynamic. So what I'm basically looking at is, so this is obviously, this is a daily chart of gold. Was it a weekly chart? It's a weekly chart of gold. And what I'm looking at here is, on a week-to-week basis, where are the commercials positioning themselves? Where are the non-commercials positioning themselves? Now, if I grab another horizontal line here, and what I'll do is change that as well. Let's go. Yeah. I think a top in gold will come when we see non-commercials at extremes. So that means that they'll increase their long positions to 274,000 contracts. Okay. Shorts, commercials increasing their short contracts to minus 307,000. That's where I think the top will be in the markets. And the reason I say that is because if we look at previous examples of when that was an extreme, right? So this is why I was trying to drag the chart left a little bit. It's a bit of an awkward thing. Maybe if I just reduce. There we go. Oh, that's why, because I was on 125%. If you look at the sort of vertical line here, and we look at when those contracts got to sort of previous extremes, and then look what happens to price, then that's what I'm looking for. So you can see non-coms here had gotten to an extreme that hadn't been seen for nearly almost a year, right? So the short contracts were down at that minus sort of 310,000 level. You got the non-com longs coming in at that sort of 280,000. And here you saw the reaction of price, right? So that's gold prices falling from sort of 2K down to 1,600. Okay, so that's a $400 $400 move to the downside. This is a weekly chart. That is a significant move to the downside. Now, everyone at the moment is looking for gold to continue higher, looking for that breach higher. And I think this is where the Community of Trader reports could help us, right? So at the moment, you know, price seems to be happy where it is. Commercials are in the suppliers, essentially. They're obviously going to sell as price moves higher. They're going to be buying it as price moves lower. They might get to a point where that supply and demand may kind of not be in their favor anymore, right? They might have sold, let's say, for instance, they've sold that much gold that they can't really buy it up. They don't want to buy it back at inflated prices. So they increase their short contracts. The short contracts then come into an extreme. That's when there's typically a top in the market, and that's when we can see a move. So I actually think gold prices are going to remain slightly supported until short contracts reach this area here. 310,000 short contracts, I think, would be the turning point where we see gold kind of push back towards the $2,000 level. That's what I'm kind of looking for at the moment. Okay. Gold at the moment, from a technical perspective as well, starting to see a little bit of selling pressure. Market rallied last week, and then on Friday, big sell-off in the market. Haven't really recovered that. We've had this move, haven't really recovered it at the moment. So consolidation looks to be a bit more bearish here at the minute. So I feel that gold could move slightly lower in the short term. But let me know your thoughts. What do you think about gold in the comment section? Let me know. Do you like the idea of being a buyer of gold, or do you want to short gold? Let me know. Looking like we're going to see a little bit of downside here, I feel. Hi, Ratish. Hope you're well. Ratish is a seller, but I'm waiting for a move back to getting around 235 or so. Nice. 1 second. if I create that as a comment, I can then pin it. I've changed my mic setup, so I'm trying to get used to where it is positioned. All good. Yep, seller waiting for the market to move up and get in around 23.55 or so. Okay, 23. Only if it holds 28.80 support. Okay, so you're looking at probably longs here, but we're actually looking for some sells around 230, 23.55s up in here. Yeah, where would I sell this? Where would I sell this? I don't know if I would sell it right now. Maybe if we got back up into this high up in here. Obviously, there was big selling coming into the market. So maybe if we got back into this zone, I'd look for the short. But right now, I don't know how I'd get on the back of that. Maybe if we consolidate here, right? And then we break, then I could look for the retest for a short down into these 2280s, where Tabo is looking for a long idea at that point. So 2280 could be a good point to look for longs. Yeah, I don't mind longs from here because it's a low. It's a significant low within the market. You know, I was long here previously after that was NFP. And we do have NFP next week as well, next Friday. So there's a good chance that if the NFP comes in very similar, well, actually this week, what am I talking about? We've got core PCE price index. Gold could be a big mover on Friday anyway. You know, if we see any kind of weakness in that US dollar, then the market might move higher anyway. If we see PCE coming in higher and missing expectations, then the US dollar will get stronger because the chances of a rate cut then are falling back. Now, if I get up the CME Fed Watch tool, we can see that actually there has been a little bit of a difference in the pricing of the Fed funds rate, right? So if you go over to, so previously September was a little bit lower. So if we go over to September now, there is a 65.9% chance of a cut, okay? And what you can do is you can come down and have a little look at the sort of probabilities around that. You can have a little look at what the market is essentially pricing in with this move here. And then down here, you've got the probability in percentage and how that changes over a week or month basis. So, you know, if we're looking at sort of current rates, how has that essentially changed over the days and weeks? And it fell to 44.9% for a cut recently in the 24th of May. And since then, with the likelihood of price being cut is 65.9. So that's telling you a picture really that the market is potentially looking for a cut in September. And I think the data that's going to drive that, obviously, is that potential. Let me see if I can bring it back up. That's seasonality. I've got so many tabs open right now. That's our FX heat map. Where is my economic calendar gone? Okay, here. Economic calendar. This is going to be the big one, the big mover for me. If we see downside on the core PCE price index, so we'll look at the graph. We are seeing a little bit of downside in it. Let's just bring that into 2022. We are starting to see the trend of this coming in a little bit lower now, especially in 2024. We had a bit of a hotter one in February, and now that's starting to come down a little bit. So I think if we do see a move towards that kind of 0% there, then I think the dollar's going to weaken significantly, gold higher. If we see a miss though and a push back towards 0.4, then I think the dollar's going to hold. And it's all to do with trying to price in that potential for a cut. So that has changed quite significantly. You know, it was at 44.9%, and now it's moved up to 65.9%. So that has changed quite significantly. November is now a 78.6% chance of a cut. Was 40, well, actually, 40, 50, it was 60%. So that's gone up from 60% to 78.6%. So we've had some big changes on the CME Fed Watch tool. So yeah, make sure you take a look at that if you are looking at what the market is trying to price in at the moment. Right then, guys, been running for about an hour and 11 minutes, so I will leave it there. If you could leave the stream a thumbs up, I would really, really appreciate that. As always, thank you to everybody that has commented and had a chat to me today. Harmy, CG, Azalano, Tabo, Ryguy, Herc, Vincent, as always, thank you for being there. Thank you for commenting. Ratish as well, appreciate you coming on and having a chat as well. And I'm going to leave it there, guys. So thank you for joining me today. I'll be back on Thursday at 2 p.m. and I will speak to you then. Cheers, guys.